Okay, ladies and gentlemen, here again a small video on business taxation, and now something completely different, just in between. Um, some ideas on economic analysis of tax rules, because you have now learned all that legal stuff, but sometimes it's also good that you are able or should be able to draw conclusions from it, because, well, we have to do with business administration. That's about decisions. So, and for decisions, you must prognostize the consequences of actions and you must foresee one or other thing. And so let's just begin with some very, very basic ideas. You can have very deep approaches to economic analysis of tax law when you once know the facts, but also that shall be learned step by step. So, if you want to judge, for example, how profitable an activity is, you will be interested in knowing how much will be the net return or the net income which you can keep after tax, because you are not interested in that you can generate 100,000. Your interest is what remains, what can I spend or reinvest. So that is necessary for you to know. So, in order to form an opinion correctly, what will the outcome be of your activities in the future, you must be able to calculate the net result which you can expect after tax. And that's not always so easy in detail, but the principle is very, very simple. You just imagine that you have a profit of 100 or 100%. That simplifies calculations greatly. Then you deduct all the taxes which are to be expected from that amount and look what remains. As you calculated with 100, all the figures which you get from your calculation is automatically a percentage of the gross income which the outcome which refers to the gross income, and the net amount which remains from the 100 will automatically be that percentage which normally is left over from your gross income. For example, imagine that you have a natural person. Now they all have different income tax rates. So let's imagine that person has an average tax rate of 30% and a marginal tax rate of 42%. Now you know, depending on the situation, you have to choose with which rate you work. The marginal tax rate is important when you want to achieve more income, then this will be applied. If you just want to find out what is paid for a given income which is fixed, then you probably think of the average tax rate. Well, here our problem is the person in question wants to know how much money will be left over from 100,000 if he or she really doubles, triples, or quadruples his or her efforts and thus makes 100,000 additional money. Our taxpayer shall be a natural person, shall be member of a church. You perhaps have heard that in Germany there is church taxes, where the church where you are a member of levies an own tax of 9% on the income tax amount. So that tax is, as it is 9% on a progressive tax base, the income tax. It's indirectly progressive, like the solidarity surcharge. And that church tax, probably you know, will be collected by the fiscal authorities as a kind of service for these churches. Imagine further that the solidarity surcharge has not yet been completely abolished. Then you would come to the following calculation. A profit can be expected of 100. 42 is paid, and church tax, no, the solidarity surcharge has been abolished. You pay income tax, you pay church tax, and the resulting amount would be 54,2022. So that will remain. At least that was our first idea. Later you will see That's not yet perfect, but that gives you an idea. With that simple approach that you just take 100 and then begin to calculate which amount of 100 would be paid for which tax, you can answer a whole set of interesting questions. For example, your taxpayer wants to know how much the situation has improved due to the abolition of the solidarity surcharge. So you could compare the results without or with solidarity surcharge. So calculation B shows us what happens if solidarity surcharge is still levied. Then you have to pay an additional tax of 2.31. Calculation A is the one which we made just before without solidarity surcharge, and there you show the abolition of solidarity surcharge improved the financial situation of that specific taxpayer by a net amount of 2.31%, at least in this rather simplified approach which I chose just now. Good. Now this was a taxpayer where some specific tax was missing. The trade tax was forgotten by us. So this calculation can only be realistic if our taxpayer did earn money outside trade, so outside the applicability of the trade tax. For example, as a member of a pre-profession, as a farmer, or as the owner of houses also. Now we might change our question and say, but if now it's income from business, so what is then the case? And then, we need city multipliers to get concrete, and yeah, that can only be done for concrete cities or for the average city with 400%. So let's assume we have an average city. We have Frankfurt with 460 and we had Düsseldorf with 475, and then let's just calculate what can be the outcome. And okay, for the average city where 400% is the tax multiplier, we would have profit 100. The trade tax would be 400% of 3.5%, that's 14% of the profit. Then, according to our tariff, 42% income tax would be demanded, but you can credit the trade tax amount against this, so you get 14 deducted and you only pay 28 income tax amount. The church tax would be again 3.78 on the income tax according to the tariff. The solidarity surcharge would be 2.31. So the resulting net amount would be 51.91. Had the solidarity surcharge been abolished, the amount would go up to 54.22. If you live in Frankfurt, 460%, then your trade tax is higher. 460% of 3.5% is 16.1%. Then the income tax would again be, that is what we assumed, 42%. But you could credit the trade tax, but only to the maximum amount, which corresponds to 400% trade tax rate, so only with 14. So you would still have to pay 28. The rest remains unchanged. So the net amount is 49.81. Without the solidarity surcharge, it would be higher, 52.12. In Düsseldorf, again, the trade tax is higher, 16.63. Again, you can only credit 14 units. So the income tax would stay at 28. The rest is unchanged, and the net amount would be 49.28, or after abolition of the solidarity surcharge, 51.59. So nice. Okay. So you can do similar calculations for taxpayers who have other personal marginal tax rates, for example, with 45%, and income from business. So the principle is always the same. Now let's look at 45%. Average city would again be 14% trade tax. ESTG amount would be 45, credited 14, so 31 has to be paid. Church tax goes up 405. Solidarity church charge would go up to 475. Resulting net amount is 48,475, or without solidarity surcharge 50,995. Or if you abolish both the surcharge and abandon your church, then you would only have 45% to pay, so then you would end up with 55. When you live in Frankfurt, or when you earn your money there by your business in Frankfurt, then the calculation would change a bit. Frankfurt would demand 16.1 trade tax. 460% of 3.5% is, as far as I hope at least, 16.1. Again, 45 would be income tax. You can only credit a maximum of 14 to that for the trade tax credit. So 31 remains to be paid. The rest remains unchanged. Resulting net amount is 46,375 and might become higher if the one or other tax can be abolished or avoided. Düsseldorf is yet still high, more expensive. Trade tax 16.63. 45 income tax according to our assumption. Creditable is only 14, to be paid is 31. The rest is unchanged, and 45,845 could remain, or perhaps other results. So you see, the result is strongly different depending on which type of income you have, where you obtain your money, and so on. So indeed, now, for example, imagine you want to choose if you open up a business in Frankfurt, in Düsseldorf, or somewhere in a village with 400%. Then these figures would be highly interesting to you, naturally. Now, surprise, my previous results calculations were all wrong, at least if you are the member of a church, because what we have overlooked, completely forgotten, or to say politely, what we have simplified before, is that church tax is again a deductible special expense. So it lowers the income which you have to pay taxes on if you are the member of a church. It lowers the income in the year when it was paid. Now that makes calculations a bit difficult if you pay the church tax for this year, or if you pay a final amount only next year. So let's assume your prepayments are absolutely correct, 100%. They meet the final payment which has to be made. So at the end of the year, you have prepaid exactly the amount which you will owe to the fiscal authorities. Under that assumption, how can we then find out how high the tax burdens will be? Well, we need here a system of equations. What we know is church tax is 9% of the income tax. What we further know is the income tax is income minus church tax taken by 45%. This again relies on the assumption that the tax rate of our taxpayer is 45%. Otherwise, you would have to modify the approach. Now, this system of equations is evidently transformable. You can replace it by equivalent conclusions. If church tax is 9% of income tax, you can fit that into the second equation, and then the second equation turns into income tax is the income minus 9% of the income tax, and all that in brackets taken by 45%. Now, equation number 2 can be rearranged into this variant. Income tax is 45% of the income minus 9% of 45% of the income tax. Now you can transform that to income tax plus 9% of 45% of income tax is 45% of income. And that can easily be transformed by some additional steps. In the end, to income tax is income times 0.432484 and many other digits. Rounded, let's say 43.248%. That seems precisely enough. And equation 1 can then be also solved. Church tax would then be 9% of 43 to 48% of the income, so 38923% of the income. So that leads us to the following comparison. Our table with results changes a bit now when we take that effect into account. The average city, again, you earn 100. The trade tax is 14%, that is 3.5 times 400. Now the income tax on 100 has, due to the deductibility of our church tax payment, dropped down to 43.25%, that's rounded. Okay, so now just I had a small break, was a bit distracted. So let's resume the argumentation. So if here you live in different cities or earn that, the income tax dropped down to 43.25 because of the deductibility of your church tax. And so in the end, the rest remains the same, especially the different amount of trade tax, but you can always only credit the trade tax up to the maximum of 14. So in the end, you have different resulting net amounts. In our average city with 400%, there you have a net amount of 5481. Frankfurt would be 48,381 and Düsseldorf 47,851. Here you can see that the difference in the trade tax burden can indeed influence the rentability. And okay, if you leave out the solidarity surcharge, the picture changes a bit. And if you are not a member of the church and the solidarity surcharge is eliminated, then the net outcome is also a bit higher. Here you can estimate a bit how things work. Well, now when we made this correction that the church tax is in itself a deductible expense, you see that with all such calculations, the results strongly depend on that you deal correctly with all the details. In my first slides, I prognostize, or I guess, that while I spoke about it, nobody amongst you had the suspicion that something was wrong in my calculation. So a slight mistake can change everything. A slight mistake in your assumptions can influence the result. So you must really be cautious. And if such calculations are presented to you, the best thing you can do in order to try to understand them is do a similar calculation on your own, independently, then try to understand what has happened. why, for example, there is a difference between the results which somebody else got and your results, and then try to find out if you overlooked something or the other person, so that you really understand the approach and on which assumptions the results lie. That's really, really important. And don't just copy a standard approach. For example, I remember some 20 years ago, somebody made a calculation for an investment purpose, and he calculated trade tax 400%. Now, that was an investment which was meant to be in a concrete German city. And so I asked him, why do you calculate the trade tax with 400%? And he said, I always do. Now I said, this city, do you know their trade tax? Yeah, 350%. And then I asked him, okay, if it's 350, why do you then calculate with 400? And he said, okay, thank you, I always did so. But naturally, if you know that's a concrete city and you know they have a concrete trade tax rate, then use that. Do not make unrealistic assumptions. So many traps and pitfalls are there which wait for you. So always try to understand things yourself, do the calculations on your own, and then compare. Let us, by the way, shortly assume that you want to have income from capital, which will be taxed under the flat tax regime. Now, if you are a member of a church, that effect of the special expense deductibility has been built in the official tax formula, because the church tax on capital income is deducted from the capital income tax base and not from the regular tax base. So there was an official formula developed by the people who designed the law, and that is the result of a system of equations which take the deductibility and so into account. Q is something which plays no role for us, deductible foreign taxes. We don't have them in our simple example, so we have Q is 0, and so with these results from that formula, you end up with the following net results. If you are not a member of a church at all, then you pay 75, then you pay 25. You end up with 75. If the solidarity surcharge is at the moment when you listen to this video not yet abolished, then it will be subtracted again, so you end up with 73625. If you are the member of a church in a land of the federation where the church tax is only 8%, then the calculation would be 2451 capital income tax in relation to the full 100. The church tax is 1.96. The net outcome is 73.53, and if solidarity surcharge comes on top, the whole thing drops down to 72,182. Solidarity surcharge is here a bit lower as in the first column because the income tax, so the figure on which that 5.5% are to be computed, is a bit lower. If the taxpayer is member of a church in a country of the Federation of the Federal Republic of Germany, where the church tax is 9%, then the capital income tax drops down to 24.45%. Church tax is 2.2%. Net income is 73.35. Solidarity surcharge a bit lower again, and approximately 72,005 is left over. So it strongly seems to depend on the place where you earn your income, the type of income, and so what you can keep after tax. Now, if you have to have learned to deal or play with these kind of calculations, you can use that knowledge also for other further questions. One attractive question might be, how much money do I need to earn so that after tax I can keep a given amount as net income? So if I need, let's say, 100 euro, how much do I have to earn so that after paying my taxes I have these 100 euro? It's convenient again to do also such an approach on a percentage, so a 100 unit basis. And so you assume you want to keep 100 euro. Which percentage of 100 do you need to earn as gross income? Must be more than 100%, presumably, so that you can keep 100 after tax. Well, the basic approach is very, very simple for that, and that is a formula which you have to understand, and you should be able to practice it. You just need to imagine that you know the total amount of the tax burden as a percentage of the gross income as we calculated that first. So here you can find the figures as the result of our previous calculations. And how can you find the gross income then? The formula is easy. Let's say the total tax percentage, which comes out from all the calculations which we did in advance. You just add up all the taxes and transform that into a percentage of the 100 and call it R for rate. Then you know that the net income is a gross income minus tax rate times gross income. So gross income multiplied by 1 minus R. Now you can easily, with a bit of mathematical knowledge, transform that into a modified equation. Gross income is net income divided by 1 minus R. And that is all you need. So if you know now your percentage R, you can do the nicest calculations. For example, imagine you want to have a net income of 100 from interest. How much do you have to earn before tax? So we had that calculation with the 25 flat rate and the adherent annex taxes of solidarity surcharge and perhaps church tax and so. Now we just take over the net amount which results from our previous calculations. If you are not a member of a church, you keep 73.625%. If you are a member of a church, 72,182 or 72,005. Now this is already the remaining net amount, so this is already the percentage 1 minus R, which we were looking for. So if you write it as a percentage, it's 0.73625 or the corresponding values for the other columns. Now, which gross income do you need? Divide 100 by this percentage according to our formula, and you end up with, in the first column, 135.82. Forget about the other digits because, well, you have euro and cents, but not fractions of a cent. So 135.82 must be earned as income from capital, so that after the flat tax you can retain 100 euro. In case that you are the member of a church, it is a bit more, 138 plus some cents. It's highly recommendable, by the way, to do a test probe afterwards, that you say, okay, if 135 is indeed the gross income, what will 25% plus solidarity surcharge of that amount be? And if you really end up with 100 afterwards, you know you made no mistake. Good. With the same approach, you can ask yourself how much somebody needs to earn if that is a business owner and he or she is subjected to trade tax. In that case, let's assume you have again a taxpayer with 45%, church tax 9%, and solidarity surcharge and Frankfurt. In that case, you can take over the net result from one of the previous slides, 48,381%. I hope that was from the correct calculation, but just to show the principle. Now, if we want to compare that to another taxpayer in Frankfurt who is not member of the church, but also has to pay trade tax, there the outcome would be 50.425. Here you see the calculation. I hope it's correct. And so for taxpayer number 1, the factor 1 minus r would be 0.48381. For the alternative taxpayer, it would be 0.5425. The necessary gross income would be obtained if you divide 100 by these factors. For taxpayer 1, the result is taxpayer 1 needs to earn 206 euro and 69 cents in order to retain 100 after tax. Taxpayer number 2 needs to obtain 198 in order to retain 100 net. If you, by the way, now compare that with the values which resulted for mere capital investment, you see that there is a huge difference. So if you get interest from a bank account, what must be earned before tax so that you have after tax the 100 left over is far, far lower than if you invest in a business. Well, at the moment that does not seem to play a big role, because at the moment the possibilities to obtain an interest income are very, very low, so it's difficult to obtain interest income, a considerable one. But imagine you have the choice between an interest income of, or you have the opportunity to invest in something where you get interest income or where you invest in a business. If the two investments compete with each other, the interest income gets attractive already at a very, very lower threshold. You can even do nice things like comparing two cities with each other. For example, the attractivity of Frankfurt and Düsseldorf. How much does a person in Frankfurt has to earn before tax in order to retain 100 euro after tax? And how high are the corresponding figures of needed gross income for Düsseldorf, which has another trade tax rate? Here you see, when you compare the different constellations, black is a member of a church. You see 206.69 required to be earned in Frankfurt, 208.98 required to be earned in Düsseldorf, according to my data. And in Frankfurt, if you are not member of a church, 198. In Düsseldorf, the same needed amount is 200 due to the different trade tax amounts. So you see, many influences influence the economic situation. Strongly, the whole thing here depends on the personal situation. Yes, we talked about income tax, naturally. Very often rich people need far more gross income to retain 100 euro than poor people. That's right, and is built in the system. That's the effect of a progression. Naturally, if they already have far more, then you can demand or expect that they work more in order to retain the same amount. If you already drown in money, you can give away a bit more than others. But the important thing is that you should keep in mind everything here can easily go wrong. You have always to check the logic and to get familiar with how it's done. Yeah, and that shall be enough for today as a first introduction. You can also spend some thoughts on questions like if you have to pay a fine for parking in a forbidden place with a business car, so business expense but not deductible. How much gross income do I have to earn in order to be able to pay that fine? So I need 50 euro after tax. How much do I have to earn so that it can be paid? So how much do I, for example, if I make a delivery to a customer and say, okay, I risk now a fine of 50 euro, how much euro do I need to earn before tax, before the decision to pay off, to park in a forbidden place pays off, or is at least neutral? Imagine first you are the owner of a business and you live in Frankfurt with a rate of 460% freight tax, or alternatively, how much do you have to earn before tax if you are a kind of a tax advisor or a doctor, so a member of a free profession. Assume for your calculation that you are not the member of a church, that your personal tax rate is 35% under income tax, and that solidarity surcharge is completely abolished. So you might think about that. There will be no master solution for that nice suggestion. You can speculate a bit, and if you want to, you can use the comment section under the YouTube video to bring forward some suggestions or to debate amongst each other how such a task might be approached. Okay, thanks for watching today. For your patience. I hope I did not completely frustrate you with that rather basic part of mathematics and thinking, and wish you a good rest of the day. Would be nice if you come back next time. Thanks for watching and goodbye.